Every product that you sell on Amazon goes through a 5-step product life cycle, starting at launch and then moving into introduction, growth, maturity, and then finally decline before the product is discontinued. Each of these 5 stages in the product life cycle has a different strategy and different tactics that you should implement if your product is in that stage of the product life cycle. My name is Manoli Petropoulos from UIMZ. We've helped over 50 multi-million-dollar brands scale on Amazon. And in this video, I sit down with our founder and CEO, Petros, to talk about what exactly are the strategies and tactics that you should implement for every stage of the product lifecycle. If you get value, please give the video a like. And if you have any questions or comments as you watch the video, just drop a comment below and we'll be happy to answer that. Hope you enjoy the video.
So we talked about product lifecycle and where products live on the product lifecycle curve. But that's a little bit vague. Like, how do we take this information and understand why we're making the choice of where to put our product? How do we know the difference between a product that is in the growth phase and the maturity phase is a very common question that we ask ourselves and our clients ask us. So I'm going to go through each stage of this and just talk about, what that kind of product looks like, what kind of tactics generally we're going to use in that situation. And then when we get into this growth, maturity, decline conversation, we'll look at an actual real market analysis that we did and kind of like look at what defines a product in the growth stage versus the maturity stage. But yeah, any questions, please interrupt me. So just reviewing the roadmap example, we talked about our business level goals, and then we talked about product life cycle here in our product level analysis. This product life cycle, that's what we're going to talk about on this call. So when you're in the launch phase, you're here at the beginning, you have no sales, your sales are none, your reviews are 0. Really, the launch phase is the part of the project that's not necessarily geared towards getting sales as much as it is getting initial reviews and testing your product listing pages to make sure that they convert for the most highly relevant keywords that exist for your product. If you run advertising and you don't convert on the highly relevant keywords, then it's time to sort of go back to the drawing board, rethink your listing page, rethink your product positioning. Because if you're not converting for the most relevant keyword, you're not going to convert for anything else. So the launch phase is less concerned with sales, much more concerned with reviews and testing your listing page contents. When you're talking about targeting, we talked about highly relevant keywords only, just the testing phase. Placements, we're talking about search results. You're not going to go on competitor listing pages with no reviews. So you're really just talking about the most relevant keywords in the search result pages. You're going to be running very heavy promotions so that you can get those initial sales because you are fighting sort of your own reviews or your lack of reviews. Your cost of acquisition is going to be the highest that it ever is, and you're probably going to lose money at the beginning. Nothing that's super interesting here. Like, every company that's launching a product is going to have sort of the same strategy, whether your company level goal is growth or profit or somewhere in between. The launch phase pretty much looks the same for every company that's launching a product. The next phase right after launch, also very similar across all companies. This is when you have a few reviews, you have a few sales. What comes next at this stage? So at this point, you start to increase your spend with the sales increase. So as you start to see sales come in on certain keywords, you want to make sure you're spending and maximizing the spend on those relevant keywords. You're still not really going after competitors because of your low reviews, but you may start to think about that at the end of this introduction stage. You may start to test some top of search placements. I really like even limit this just to search results and maybe a little bit of top to search. But even here, like I may really just limit this to search results even at this stage. Your promotions are still very aggressive. You're still kind of fighting, asking, begging people to buy your product. Your customer acquisition costs still very high, but not as high as it was during the launch phase. And you're still likely losing money, maybe breaking even at this stage. So, not super interesting to discuss here. Like I said, every company, every product is pretty much going to have these 2 phases when they're launching a new product. It gets a little more interesting here when you enter, into this growth phase. You're still growing. You're growing at this stage, but you're still a pretty small share of your overall demand. What this means here is that there's still opportunity for a lot more growth. So the difference between a growth phase and a maturity phase is really the opportunity for growth. And we're going to talk about what that means looking at a market analysis. Your reviews here are growing, but still fewer than your competitors, likely. You're still way below average. Your advertising spend is continuing to increase. Obviously, this growth phase is going to be different depending on how aggressive that is. So it's hard to give you a recommendation here with your advertising spend, but the growth phase is going to be your highest advertising spend as a percentage of your sales of any of the 5 phases here. Your targeting is starting to widen the reach. You're focusing mostly on your new to brand customers. So you're talking about top of search here. You may add even some off Amazon targeting using DSP and sponsored display. You're going to start really more heavily targeting competitors at this stage, especially those that have few reviews or have bad reviews. You can really start to steal sales from competitors. You're starting to really focus on organic ranking here. So to get into this customer acquisition cost, sorry, I skipped a step here. Your promotions are still frequent, but not quite as aggressive as they used to be. And then when you're looking at your customer acquisition cost, it starts to drop as you improve organic reach and your repeat purchase rate. So what this means is that, in these stages here, launch, introduction, you're really spending 90 to 100%. I'm sorry, let me put it a different way. 90 to 100% of your sales are coming from paid ads. When you start to hit this growth phase, a meaningful percentage of those sales starts to come from organic. So when I mean organic, I mean your listing page starts to rank organically in search results for your most relevant keywords, and you're starting to get repeat purchases from past customers as well. So, this is going to help your customer acquisition costs, but also help your profitability because you're starting to get free sales and not just paid sales. That's why your profitability at this phase is like close to break even. This is, your difference in profitability ranges here really depends on your company goal. So you're talking about, profit-focused company is going to be on the positive side of break even. A growth-focused company is going to be on the negative side of profitability of break even. And a balanced plan is going to be like right at that break even level. So how do we think about the market and our product's position in the market and decide what phase it's in, right? So here's just a basic analysis of an appliance category. Nothing too important about what category it is. But what you're seeing here in this first chart here is like a brand segmentation. So the one thing I'm going to do here is like you'll see this price point. It's from $11 to $450. I like to narrow this down to like the actual price range of a product that we're selling. So let's just say our theoretical price point is between 100 and 200. So these are the companies that we are competing against in our market. Let's say we're selling a product for 150. So these are our real competitors. We're not really competing against products that are for $10 or products that are 400 to 500. We're going to narrow the range of competitors here. You'll see here there's some big players here. Breville, well-known brand, has a huge market share at this price point, 40-some%. You'll see some secondary players here, and then you'll see a bunch of small brands here. So the first thing you're going to look at is, how much of a market share does my brand have today? If you're in these like 4%, 5% of the market, you may, if your product is relatively new, have a lot of room for growth. But if you already have 40% of the market, you haven't launched a new product in a while, is there a lot of opportunity for growth here? You have to ask yourself that question, but it's less likely if you already have a commanding market share advantage that you're going to have a huge amount of potential for growth. So you may be more in the maturity phase at that stage. But what you really want to do is look at, the SKU level data. And let me expand a column here for clarity. If you look at your SKU level data, let's say you're Breville here, and you have 43% market share, your number one SKU is actually looks like the entire market. So they have one product here that takes up 43% of the market. It also has 7,400 reviews, which is the most in the category. So for me, this product is probably peaking as far as market share. It may continue to grow if the market itself grows, which we'll get into soon. But I would say this product is probably in the mature phase because it has a commanding market share advantage and a lot of reviews. But if you look at the second product, this company called MacKenzie-Childs, this also seems to be a one SKU company here in this product range. I would say actually is probably more geared towards growth because one, they only have 25% of the market, so they could grow, but also their product only has 32 reviews. So this tells me this product is relatively new compared to the Breville. So this is a really good example of like this Breville is probably mature, whereas this Mackenzie Childs product is likely in the growth phase and could potentially become the market leader here. They've done an amazing job, even with 32 reviews, to take up so much of the market. So that's a good way to put that. It's hard to tell if a product's in decline without understanding the company itself. You're really, you have to understand the historical trend of the product. So a company that is in mature phase of their, a product that's in the mature phase is peaking with sales. So they've seen growth, but they haven't seen sales start to decline. Whereas a product in the decline phase has peaked in the past and they're now, at a smaller monthly revenue number than they were, let's say, 12 months ago. So that's the difference between, say, a product that's peaking maturity and a product that's in decline. Another thing you really want to look at, we have some other analyses here, monthly sales by price, monthly sales by review score. This review score actually is really important thing to think about is like, where are your competitors as far as their reviews? So if you have a product that has been growing in market share, and you want to know, like, is it going to continue to grow or is it going to hit a wall? A review score here is a really good place to understand where you're at. So if your product, is a 4.6 review score and the rest of the market is, congregated here in the 4.1, you actually have a really good opportunity in my mind to invest in the product. But if you're at 3.8, 3.7, no matter what you do at this stage, you could spend more, you're really going to have trouble gaining market share. So a lot of it depends on how well received your product is in the market as well. And then the final thing we look at here, we use Google search trends. There's other ways, market reports, industry reports. The real idea here is you want to see if your market is growing overall. If the market is growing overall, then you may have an opportunity for increased spend, even if your product has reached its max market share. Because what you want to do is maybe maintain that market share as the product category expands. On the other hand, if your product is sort of plateaued, as you can see, this category really hasn't grown year over year, but it hasn't decreased either. Less opportunity for growth. But if you have a superior product, if you have an advantage over your competition, if you have a higher profit margin, you may see an opportunity. So the name of the game here is like, can you recognize opportunity for growth, and where can you recognize sort of a lack of opportunity for growth? And if you have a portfolio of 10 products, it's important to see like which of these products actually can justify an investment and which of these products, maybe we don't invest in very much. That's really the difference between a growth phase and a maturity/decline phase. So let's switch back to our PowerPoint presentation here and talk about maturity. So maturity is when you, like I said, when you hit your peak market share, your peak sales, you're starting to get a category leading number of reviews. So you're no longer, your review score is a positive. It's contributing to your sales and not necessarily detracting from your sales. At this stage, your advertising spend is starting to decrease as a percentage of your total sales. You're kind of back to targeting your relevant keywords, your high converting keywords. Competitor listing pages become more successful as a targeting option at this stage because of your review score. Your placements are really search results, listing pages. Like I said, you're not really investing in an opportunity at this stage, although it may make sense. Really what you want to think of here as far as your targeting and placements is like high ROAS advertising options. So whether that's search results, listing pages, even DSP, sponsored display, whatever, if you're converting at a high rate, that's what you want to spend your money on. You're not necessarily trying to spend at a loss to try to gain new customers and gain market share at this stage. Promotions, it's more strategic, more infrequent. Maybe at this stage, you're only running promotions on prime events like Prime Day, Black Friday. You don't need to run promotions all the time. Customers trust your product. This is really going to help your profitability as your average sale increases. Your customer acquisition cost is decreasing. At this point, your organic share is increasing. So, at this point, your organic share might be increasing above 50% compared to the growth phase where it might be 20 to 40%. So profitability is going to be positive always, no matter what kind of company you are. Even if you're the most aggressive growth company, your mature products have to be profitable. And then, ending this discussion here with decline, sales are starting to decline. That's really the number one indicator that you're in this phase. Once a product sales start to decline, it's hard to get them back up again. Like there's a reason that your sales are going down. Like every product here is different. Like we discussed on a previous call, you know, you might enter this decline phase after years of selling, but some categories are shorter. Like we talked about iPhones, those start to decline after a year. Like once the new model comes out, that product hits that decline phase typically. Still very profitable because you're not spending money on ads. You're not running promotions very much. So this is still extremely profitable and important part of your product portfolio. But you're really not banking on this to sustain your company in the long term. So you want to suck out as many dollars as possible from these products to invest in the products that actually have growth opportunity.
What is the relationship between decline and the end of the life? We're going to discontinue this product, pull the inventory off of Amazon. Is this kind of just
Mhm.
we're just keeping this as a profitable product, or is this sort of like we're going to end up, discontinuing this?
Yeah, I think that's a different answer for everybody, but yeah, once the sales drop to a certain point, it may make sense just to discontinue it. Or if it's technology and you can't support it anymore, that's a pretty obvious sign to eliminate it. If you're replacing that product with like a very close substitute, just with like minor upgrades, then it might make sense just to get rid of the old model completely. So like really, whenever it stops making you a meaningful amount of money, or whenever it doesn't make sense to support it anymore, is kind of when you go to end of life. We have one client now that just has decided to exit a category completely, just because it doesn't match up with where their brand is going. So that's another reason to drop a product from the catalog. Any more questions?
When we're looking at the maturity phase,
Hmm.
the Toaster report that you showed had the Google Trends showed that the market is pretty stable. It's not really growing, it's not really declining. How long
Right.
can this maturity phase last? I mean, this could last, depending on the product, if it's an evergreen type of a product with thousands of
Mhm.
reviews, it could be maturity for years potentially.
Yeah, absolutely. The example I use all the time is something like Coca-Cola, Pepsi. Those products are mature, but they probably will never enter decline phase unless like the tastes of the world change at some point. So, Coca-Cola has been in the mature phase maybe for 100 some years, at least in the US. They see their growth opportunities maybe in different countries or different markets. But as far as like the US market, that brand's been mature for a very, very long time. So that's a really good question. In the toaster category, especially at the lower level, let's say like less than $50, I bet you there's products that have been on the market for 10, 15 years without much change. But at the higher end, that is probably much, much less.